If you're interested in Uber stock, and I know many of my viewers are interested in Uber stock because I've had it rated as the best stock to buy this year, then there's information from the company's most recently completed quarter that you need to know about before you make your decision on buying or selling Uber stock. So I'm going to share those details with you in this video, what the management team said about their latest performance, and I'll also share with you my discounted cash flow model for Uber. I'll talk about a few of the elements of this discounted cash flow model, the important things you need to know before making your decision on buying or selling Uber stock. So let's take a look at these details after a brief message from my sponsor.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Okay, so one of the things that Uber stock investors need to know about is the company's membership program is demonstrating excellent growth. The program is a huge part of the platform, with Uber One having 36 million members, and these members spend 3 times more money. That's why it's so important to attract a member, which the monthly fee is around $9.99 per month. And you get a few membership benefits, such as saving on delivery fees if you're using Uber Eats. So this is important. It's also important for another reason, in that it makes it more difficult for a rival to take any kind of business from an Uber customer. So if an Uber customer just uses Uber sporadically and is not a member of Uber One, then sometimes they might use another platform when they're making an order for food delivery or when they're taking a ride. They might open that other app, check the prices, and maybe use the app for purchase. But if you're an Uber One customer and you've already paid the monthly fee and you're saving on certain amounts for becoming a member, you're going to want to use Uber as frequently as possible so that you get the most out of your membership. And so that causes the customer to stick with Uber more frequently, become a more valuable customer, and stick with the company longer term. You're less likely to go to another company if you're an Uber One member. So it has plenty of benefits, and 36 million members, that's a large number. At $10 a month, that's 360 million per month, almost $4 billion per year coming from the membership program, which is also a less volatile revenue stream for the company. People pay the membership fee on a recurring basis, regardless of their making purchases or not making purchases. And it kind of flattens out the company's revenue and makes it less risky, less cyclical, and uh, better able for the management team to make decisions, because they have this source of income that's more steady, and then they can make decisions based off of some of those core customers that they can forecast more effectively. So in the most recent quarter, the company grew its audience, which is new customers, by 15% year over year. 15% is excellent growth during a quarter which economic growth worldwide slowed down almost in every region. You had a slowdown of growth, and it's a result of policies from President Donald Trump, increasing trade barriers, increasing tariffs, which of course decreases economic activity, right? If you're paying more to import goods as a small business, then you're not importing as many goods. And if you're not importing as many goods, then the places where you're buying those goods, they're not going to employ as many people. So in countries like China and India and Vietnam, you're not employing as many people in those regions. And if they're not employing as many people in those regions, those are people that are not going out and spending money in the economy. And those people are not buying things from other parts of the world. And so we had a macroeconomic, a worldwide slowdown, and everyone, including the International Monetary Fund, has decreased their forecast for growth for 2025 and 2026 as a result of these tariffs. And so to grow your business at 15%, to grow your audience at 15% during this kind of period where economic growth was slowing down and not accelerating is impressive. And it goes to show the organic demand for your products. You're delivering enough value that people are still spending money on your products, even though they're not facing as good of a position in their balance sheets. And that's another thing to note here. Even though people will be paying a higher cost of goods for physical things, services like food delivery and rideshare become relatively more attractive now. So that's a positive for Uber in the medium to long term if these policies remain in effect. Because if you're paying, if you notice that last year you were able to buy an iPhone for $700. This year you need to pay $900. You might say, you know what? I'm going to save this $900, keep my iPhone for a year longer, and I'll spend this money on different things. Maybe I'll take an Uber and go to the beach, or maybe I'll take an Uber and go to a concert. Maybe I'll take an Uber and go out to a bar, spend some of my money on some services and not spend my money on goods because I'm a little bit shocked at the price increases for these goods. And and I've been forecasting some of that shift in consumer behavior. By the way, this document I'm reading from is Uber's most recent conference call with Wall Street analysts. I've made this highlighted document available to my channel members. You can see this in the membership benefits section of my YouTube channel page, and you can join our channel for less than $5 a month. So, as you might know, Uber is an international business, and in some of their developing markets, they have the the motorcycle, and these are two-wheelers that are coming in a bunch of their developing markets, and it's over $1.5 billion in gross bookings, which increased 40%. So the premium side of the business is now over $10 billion, which increased 35% year over year, and the reserve business continues to grow 60%. So these are different programs within the business Uber's implementing to add incremental revenue. I like the new category they offered for people in more rural locations to reserve their rides in advance because it offers a win-win situation for both the customer and the driver. The driver, one of the unattractive things for driving for Uber is you don't know how much money you're going to earn. You don't know what kind of demand there's going to be when you wake up in the morning and you go out to make your rounds, right? When you go out to see what kind of business is available as a driver. But if there are reserves, meaning there are rides that are reserved in advance, as a driver, you can have more certainty. You can have more certainty about, oh, at this time I have a customer that's going to be here, and at that time I have another customer that's going to be there, and then at that time I have another customer, and so you can fulfill your entire day with customers that are already booked in advance, and you have your day's revenue ahead available for you. And then for the customer, it's also favorable because they offer you a lower price and you get to know for sure that there's going to be somebody there waiting for you at the time you want them to be there rather than opening the app, 20, 30, 40 minutes before you need it and not knowing if there's going to be a driver available or what the prices are going to be at that moment, if the driver's going to cancel on you, a lot of uncertainty, right? So the reservation business, I'm not surprised to see it growing, and I think it'll continue growing from here. Right. So let me touch on my discounted cash flow model for Uber. I think this business continues growing significantly. I'm forecasting its revenue rises from 8.5 billion in 2025 up north of 17.5 billion by 2030. And the foundation that the growth will come from is the convenience factor on both sides of the equation for drivers and riders. Drivers, I think if you're an entry level worker, one of the more attractive gig economy jobs is driving for Uber or DoorDash or one of these platforms because it allows you to pick your own schedule, work as many or as little hours as you want. And then from the consumer standpoint, the cost of car ownership has grown so much in recent years that taking an Uber whenever you need transportation becomes a much more attractive option. I did a calculation myself, and it would be less expensive for me to take Uber, significantly less expensive for me to take Uber than to own a car. Now, I have a family, so it doesn't actually work for me personally, but for another individual that doesn't have a family, that doesn't need a car, I think it's a very attractive option, and I think that's going to continue to drive growth in customers and increasing customer engagement.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.